All right. Yeah, we got it. We got it going on. We're live. Thank you so much for joining me. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. Another update in the markets. Things are looking pretty good. We had 4 weeks in a row up. Last week, markets were down a little bit, but a good Friday. We had a good day yesterday. Good day today. We're trying pretty hard to make a positive conclusion on rather small up days. But I'll give you my spin on it. Okay. Um, I I like these small up days. All right. I like us. I don't like it when we have these. Up 800, up 600, up 900 point days in the Dow. Up a 2 or 3% rally in the S&P 500. It feels good at the moment, but it's like a sugar high. It just wears off very quickly. It's not. It's not a bankable. It's not a bankable rally. I want the market to build up on solid, steady gains. Okay, I'm just getting my screens ready while we're talking. All right, I want solid, steady gains in the market. I want you to know that when you invest your money, that it's going to a good cause and a good place. The cause is your future. The place is the stock market. And I get concerned that people think the stock market is not a fair place to invest. Now, I'm the first one to say, the stock market doesn't have to be for every penny you have. There are things like real estate, whether if you're in residential or commercial real estate or both. There's, savings, there's investments, there's gold coins, there's comic books, there's stamp collections, there's guitars. There's lots of things that you could put your money into with the expectation that those things will hold up in value against inflation, meaning that as inflation rises, the value of these types of collections or investments, assets, will rise at least at the pace of inflation, if not higher. But I can't speak to cars and guitars, although I do play the guitar and I have a guitar. I'm not particularly good at it. I'm kind of I'm a beginner. I really am. I took up guitar a couple of months ago. I need to put more effort and time into it, but I do enjoy it and I strum along. So that's what we're talking about. The market is a good place to be. But when you have giant swings or things that happen that aren't easily explained, people get suspicious. They start to say dumb things like it's rigged. Oh, they took these stocks all the way up. I saw somebody commented on one of my Instagram posts. They took these stocks all the way up and then they took them down. Okay, who is they? And then it's like they took them up. I mean, what we saw with pandemic stocks, with tech stocks going up and going down, with the market going up, going down, this is nothing new. This is not like, uh, you know, this isn't like a new concept. This is something that we talk about a lot. This is why I always say to you, I'm not in pandemic stocks. It's not for me. I know my risk tolerance. I know my client's risk tolerance. The type of client that wanted to put all their money into Robinhood stock, Roku, Peloton, and buy crypto, um, that person is not going to be my client because it's not my thing. We wouldn't be a good team, a good fit, if that's what you want to do. And I certainly don't want to be here when you are at the point where you're down in all these things and you're going to be like, "What happened, Mitch? It's your fault." I'm like, "No, it's you invested in speculation." Um, and it just goes to show you that the more risk you take, it does not necessarily mean the more return you get. When you take too much risk, it means the likelihood of you crashing and burning is so high that it's not even worth taking the risk. A lot of people I spoke to, in particular people younger than me, I'm 55, so I'm talking about people, let's say under 40, were all over crypto and the pandemic stocks. The AMCs of the world, right? Peloton, DoorDash, so many. And they all said the same thing. I'm in it for the long term. These are the companies of the future. They're going to go up, and how much could they go down, even if they do go down? Well, a lot of these stocks, like Carvana, are down more than 90%. You think these stocks are going to come back? Like, you think Carvana is going to go back to 300 down from like 7? In what universe? Maybe a different metaverse. I don't know. It's I don't think it happens in ours. It's just not nothing against Carvana. It's when I see a stock to go down that much, it typically that's it. They don't come back. So I'm not going to be in them, and I know someone's going to say, "Oh, but at some point, a down stock, becomes a value." It's like I can't, Captain Obvious. That's horseshit. Captain. Oh, at some point it'll be a value. Oh yeah, okay. That's right. At some point, a stock will hit a low and bounce back up. But a stock like Carvana was at low at 250, 200, 100. Was it at 60, at 30? Was it at 10? It's like, where is it now? 6? I mean, it's like such obvious things. I used to have this client. He used to always send me these weird stocks he would see and asking me to analyze them, give him my thoughts. I'm like, I'm not spending all my time analyzing every little speculative stock that you come up with. And he would say things like, at some point, it's got to be a value. Like, yeah, at some point. If you just want to tell me at what point that is, we'll have a lot more fun if you tell me that. Yeah, people think I just would automatically know like every speculative stock. Anyway, I digress. Stocks are up today. They were up yesterday. They were up Friday. Why? The elections. Why? Because everyone knows that Republicans are the best thing ever for the stock market. And I'm not kidding. Actually, Republican presidents, Congresses are not always the best thing for the stock market. History has proven that. We have the statistics to prove that. But this is not a matter of Republican or Democrat, because there will come a time when Republicans are the best thing for the stock market in terms of politics. And there comes a time when Democrats are the best. And we'll switch off. And let's not get so one sided. Let's look at the environment we have now. It's gridlock. That means that President Biden can't get through more spending. And it means nothing's going to get done. And believe it or not, the street likes that. They just want to know where things are, leave them like that, so investors can operate within an easier framework meaning one that's not fluid and changing all the time. So that's what we'll probably get. The Republicans don't have to win the Senate to have that. They just have to win the House, and they become a thorn in Biden's side. It's going to be a very ugly, contentious time. Someone said to me today that, the market's, the Fed's going to stop raising rates because by the end of this year, because Republicans have taken control of Congress, or at least, first of all, no, even if the Republicans win back the House and the Senate, it doesn't mean they take back Congress, because they don't actually start the new Congress until January. So that doesn't really change anything. It's just people say things that are so uneducated that I can't stand it. However, inflation, what do people care about? Inflation. The cost of everyday living is sky high. The misery index goes up. That's what inflation does, right? Warren Buffett calls inflation, the inflation numbers, the misery index. So this is what we have. This is what people are voting on first and foremost. All the other stuff is really secondary. The Capitol riot, insurrection, women's rights, social spending, infrastructure, Inflation Act. All of these things are, hot button issues, but ultimately, people are a little miserable with their financial situation, even with, near record low unemployment, and that's what people are going to vote on ultimately. And Democrats were in power while it happened. You live by the sword, you take credit for the good things, you're going to have to take credit for the bad things. And that's what's happening. So that's my political rant. I hope that was not overly political in one way or the other. I do my best to be apolitical on this live stream, unless I see somebody doing something so over the top stupid, then I'm going to have to call them out. But today we're not going to do that. We'll see what happens with the election. Anyway, we're going to go over the couple of stocks of the day, how the market did. I think the real deal in terms of talking to you about the election and how everything did will be tomorrow. And I think tomorrow will be a much better show. We've got a couple of things to go over today. Don't get me wrong, but I think tomorrow will be a much better show when we officially have a tally on the House and the Senate. So let's just roll the introduction, which I probably should have rolled about 8 minutes ago, but here we go. All right, I see a few of you out there. Thank you so much. If you would be so kind, give me a thumbs up or a heart, an applause reaction, a wow, whatever reaction is available to you, depending on which social media platform you're watching on. It helps spread the good word to the rest of your contacts about the work we do here. This is all sponsored by me. I don't take money from fund companies for this. This is all unbiased. This is all strictly educational. That's all I want to do here is share the knowledge, educate you. Hopefully, you'll see that I am somebody that you would enjoy working with as your financial advisor. If you don't, then I'm glad you're here anyway. And when you like or make some kind of reaction, a like or thumbs up, whatever, I get to see who you are. And of course, if you have a question, ask in the comments. I love hearing from you. If you just want to say hi, where you're from, say what's up, ask anything, hit me up in the comments. I love to see you there, and that's the best part about it. I see Charlie is out there. Thank you very much, Charlie. Charlie, just a little rumor I heard that you have some kind of spreadsheet you're coming out with that I'd be able to plug and play that right into Redtail and have the whole thing populated for new account openings. That would be really cool. Are you working on that? Let me know. You don't have to let me know in the comments if you don't want to. We could just email. But yeah, that would be really exciting. I think things like that are exciting. Just what could I tell you? I like to nerd out. So let's take a quick look at how the major, let's take a look at the stock of the day first. Okay, there's two stocks of the day. All right, first one is Salesforce.com. Okay, Salesforce to cut hundreds of employees next Monday. This is just out. Okay, so we are seeing layoffs like crazy now, and it's across the tech board. It's Google, it's Facebook. Lots and lots of companies are now doing layoffs, and we all thought that technology stocks and companies can only grow. But again, this is not the first time we've seen this. What happens is you get too much capacity, too much cloud capacity, too much gear, too many semiconductors, and all of a sudden you got to slow things down. Eventually, all the capacity we have in technology will be absorbed, new products will come out, and we'll be back to the races. I don't think that day is today. I don't think it's tomorrow. These things take a long time. When the NASDAQ finally crashed in March of 2000, and keep in mind, it started tanking before this. Just March of 2000 was when the biggest tech stocks finally cratered. It took about 3 years to find a bottom. It took 15 years for the NASDAQ to recover. 15 years. So if history is any guide, I just want to let you know the odds of the winners from the last bull market recovering just like that short term is really, really low. And if you're expecting that, you're going to be really disappointed. In the meantime, Merck is at a new high. Other stocks are hitting highs too. Stocks you wouldn't even think of that might not be so exciting to you. Anyway, Salesforce is cutting people. And let's see the other stock of the day, because I like to have more than one stock of the day, is Disney. And this really sucks. Disney is down about $10 in aftermarket trading. This really sucks because I thought Disney was a good buy in the high, in the low mid 90s, and it was starting to look good, 104, 105. So I given that back, but they missed so badly on their numbers. Plus, the other thing is this is also seen as a company that could do poorly because they have caught the ire of Republicans. They had that spat with Governor DeSantis of Florida, or as Trump calls him, Governor the Sanctimonious. It's amazing how that stuff happens. Anyway, so those are the two stocks of the day. But Disney down 10. It's a Dow component, big company in the S&P 500. That is the kind of thing that could really pull stocks down tomorrow. We'll see what happens. Sometimes stocks are down a lot after market trading, and by the time you get to the next day, they recover a lot of the losses. Sometimes they even go up. So we'll see how it goes tomorrow. Okay. Let's take a look at the Dow, up 333 points, up 400 yesterday. So continuing to move up. Now the Dow's at 33,000. Nasdaq up 51 points, not bad. S&P up 21 points, not bad. These are good. These are good gains. I don't want these to be up 2 or 3% in a day. I think they won't hold it. I want sustainable gains. Oil under 90. That's a pretty big deal. Oil under $90. We see oil get back down to the low 80s. You see the price at the pump come down. Yields on the 10-year a little bit lower. The VIX is up a little bit. See, the market was up, and yet the VIX was up. The VIX should have been down today. So investors are a little worried about some volatility tomorrow. Okay, let's take a look at the bond yields. Bond yields were down across the board. I did speak to people yesterday about buying bonds. These are some clients who, well, I have discretion over my client accounts, but there are some times when you're talking to a client about new money and it's millions of dollars or more substantial amounts of money. That is going to warrant a phone call, even if I do have discretion in those accounts, because you want to make sure before you tie up that much money. And a lot of people feel that they should be investing in more stocks because of the opportunities. A lot of people feel that they should have a balance of stocks and bonds. And a lot of people feel they should only have bonds. To each his own. But that's why you speak to people, to make sure you're on the right track. Generally speaking, as people get older, they start to go more bonds and cash and less stocks. But not every time. Some people believe that, well, if the market's down, I should increase stocks. So I like to make my choices of more stocks or less stocks, more bonds or less bonds, or more cash or less cash, based on the trajectory of the client's life cycle, not based on what the market is doing now. But I do have clients that do one or the other, and it's up to me to either convince them they're wrong or work with them in a way that's advantageous to them, that they want to be worked in a way that they want to be worked with. And yes, there does come a time when clients do things that I find are self-destructive, and that's when I tell the client, either you change your ways or we have to part company. It's not that big of a deal. It's anyone who has clients knows that dealing with a client who is not in tune with you and you're not in tune with them, it is the worst. It takes up a massive amount of time and energy and headspace, destroys your psychology, and those kinds of clients are not worth having. I used to accept clients like that when I was much younger, in the early days of my industry, because I felt I needed every client I could get. I don't feel that way anymore, and it's a very good feeling, very liberating feeling. Okay, so that's the story for today, but tomorrow is going to be a much more important day. We will see what the market looks like tomorrow in terms of how the elections go. I know. Republicans take the House, red wave. We all get that. Let's see what happens in the Senate. It might be conclusive tomorrow. We might, it's going to be close with a few states, but there might be enough states that are, where the winner is winning by enough that we don't need recounts, or we don't need to wait a few days. Like I know Georgia is expected to take a few days to count mail-in ballots, for example, There's a lot of states that have mail-in ballots. They can't even count the ballots until after until election day is over. So we'll see. We'll see if there's any. We'll see if there's anybody challenging the elections or saying someone that was rigged or whatever. I wonder how much patience the public is going to have, and how much patience judges are going to have, because probably about by now 100 federal appellate and judges and plus the Supreme Court, probably 100 or more major judges in all jurisdictions have seen something to do with allegations of election malfeasance. I wonder how many of these judges are going to have like patience to do this all over again. Like, oh, we're gonna challenge it. We think there was fraud. We heard there was fraud. We want to present evidence. I wonder how many judges are going to be like, nah. We're not doing this again. You're out of here. I wonder how much of that is going to happen. So we'll see. So what do you guys have going on for Thanksgiving? Yeah. Well, we don't have to waste a whole half hour talking about that, but I'm going to get going. You hang in there. Oh, I want to show you. Oh, come on. Just give me one more second. I want to show you something. Maybe I could get this up on my screen without having to. Oh, yeah, here it is. Oh, yeah. I'm going to show you a picture I made. I made this picture today. Just humor me for a second, please. Okay. I made this today. Oh, this is going to be nice. Oh, yeah, this is going to be nice. Look at this. Look at that. All right. Based on I made this today. So I'm proud of my little, digital decorations. Okay. Based on the outcome of the elections today, here are the changes I will make to my financial plan and investments. Nothing, nada, zilch. You know why? Because whatever policies you get, we could get different policies in 2 years. Policies that come into play today could be wiped away later or added onto. And it's just a really, making up changing your whole financial decision tree, your plan, your investments, just based on elections. You're going to be changing everything all the time, and you're going to wind up not being consistently sticking with a plan that works for you, and that's going to hurt you. Making changes based on how the election outcome today is going to be a waste of time. Maybe you'll say, oh, I bought oil stocks and those went up. They might go up for a little bit, but I have to tell you, a lot of stocks that would ordinarily work well under Republican leadership, they've already gone up. Maybe they go up more. But if you're diversified, diversification is a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. But even if you are properly diversified, you'll have tech stocks, you'll have oil stocks, you'll have healthcare stocks. You're diversified, meaning you're ready for anything. And to get away from that, it makes no sense to me. You might expect a certain outcome and a certain way for the market to behave based on which party, Democrats or Republicans, control a House, of Congress. But you could also be wrong, and the exact opposite could happen. So invest based on things that you could control, like your risk tolerance, based on your time horizon until your financial obligations. Review your investing plan, financial plan, and estate plan with qualified professionals. Review your tax plan with a qualified professional. Okay, these are the things you can control. How much money you put away every pay period in your retirement plan. Control the things that you can control. Stick with it. Trust the process. Surrender the outcome. And don't give in to the noise, the chorus of negative drama. Don't give in to that to pull you away from your financial goals about what you're doing now to prepare for them. That's the most important thing that comes out of this election for investors. Thanks so much for watching, and I'll see you tomorrow. Have a great night.